Okay, we're gonna go ahead and talk about process cost accounting, just what it is. So the one thing that you can count on to be different from job order cost accounting or job order costing is that with process, we don't allocate costs based on the job, we allocate costs based on each process so that we can directly tie the process to the cost as we go along in production. So what this says is used for production of small, identical, low-cost items, mass-producing automated continuous production processes, and costs cannot be directly traced to each unit of product. So in a job costing, because they may make custom products and it may be one of something, you can allocate or trace those costs right back to that particular job, that unit. Unfortunately, with process operations, because it's almost like producing in bulk, you can only trace costs back to the process or the department as it goes along. Because they're all the same product, it doesn't really matter, but you can at least trace costs back to the department, not necessarily the actual units that were produced in the process. And mass produced. So, for instance, the companies like Nestle, who produce things like water and so forth, when they produce water, they're not going to produce one bottle of water. They're going to produce cases, right, at a time. So that's what they mean by that. So we're just comparing the both systems. We got job order systems, which we know are custom orders, mean one or two items. Heterogeneous. What do you think heterogeneous means? Different, right? Custom. Low production volume, which means you won't develop or won't produce more than two or three items at a time. High product flexibility, meaning because it is custom, it can be detailed according to whatever the order is. Low to medium standardization. All that refers to is it's unique. So it's not going to be the same item over and over again. Process systems repetitive, meaning when they go through production, the production is the same every single time because the products are the same every single time. Homogeneous products, which means that you're going to have standardization. Everything is going to be the same. Everything is going to run through the same. High production volume, they produce in bulk. And low product flexibility. If what they're making is spring water, then that's not really much flexibility in that, right? Even if you decide to add some flavor to it, it's still going to be some standardization there because that's what the customer expects. So, how does it change or how does it vary the way that the chart goes, the way that the process goes? We still account for these three costs of direct materials, direct labor, and factory overhead. In job order costing, we used to allocate all these costs to the actual jobs or job lots, right? Um, and then the finished goods, we would know how much it would cost us for each one of those individual jobs versus a bunch of jobs or job lot at one time. Now with process costing, we still got these same three costs. However, when we allocate them, they first go to the process. So each process is going to have some cost allocated to it. And then once it gets to finished goods, it's also going to be some cost. And then we're looking at cost per unit versus per job. So all this is saying is that they have the same objective to allocate costs, right? Second thing is same inventory accounts. We're still doing the same thing. Raw materials, work in process, finished goods. The overhead is a little different because before, you remember how if you didn't have overhead, you took the predetermined overhead rate and multiplied that by direct labor, and that would give you your overhead under job order. However, under process order or process operations, the overhead with the predetermined rate can't just be applied to direct labor. It's not that simple because we're allocating costs based on process. So we have to take the predetermined rate and we have to multiply it by what has actually been produced or in production on its way, on its route. past the raw material stage. Okay, so this is talking about the journal entries. Journal entries are identical with the give and take, the factory overhead part. Difference between both costing methods is the cost of goods sold transferred to finished goods. Because on the job order, when you had items that were not necessarily raw materials anymore, where did they sit? Do you remember? Remember how when you go from raw materials to the next step, goods in process, right? And then at that point, we didn't apply cost of goods sold until the finished product came out for the job, right? It's different for process operations because you might end up allocating that cost of goods sold way before the finished item is completed. But job order costing, it says it here, transferred to finished goods, equal to the sum of all of the completed jobs for that period. Over here, transfer to finished goods equals the number of completed units times the cost per equivalent unit, which we're going to talk about how you calculate that. So this is just the illustration that they have in your book, and they're basically using this company, Gen X, and they're taking us through all the different processes from start to finish for a product so that you can see how all of this fits together. So you remember we had the same similar grid for job order for the last chapter. But starting off with materials, you're going to still have direct material costs, indirect material costs, and they're going to all go down to goods in process. You're still going to have factory overhead. We need to find the applied and the overhead to see what's the difference. And you're still going to have labor, which also we're going to be concerned about direct labor or indirect labor, right? But all of it goes to goods in process, and from goods in process to finished goods, and then cost of goods. So that's what they're going to take you through with the whole Gen X. So EUP, or equivalent units of production, costs that are accumulated for a period of time by process or department. Unit cost is computed by dividing accumulated costs by the number of equivalent units produced in the period. And they give you an example here. Equivalent units is a concept expressed in numbers partially completed. So the reason why we do EUP is because we are estimating how many are going to actually be completed throughout that process. And so it says 2 1/2 full pictures are equivalent to 1 full picture. So you can look at this as goods in process, right? Estimating what it's going to take to get to full or completed. This is a lot of okay. So for current period, they got 15,000 units that they started. They completed 10,000 of those units, leaving 5,000 in goods in process, 30% complete. This is why the EUP is so important, because if you only got 30% complete, you automatically know you have how much left to do. 70%, right? Still 70% remaining. So it says how many equivalent units of production did Pencil Co. have for the period. So we're taking what they have actually completed, and we're also multiplying what's left times what? The 30% or 0.30. And then we're adding that to the 10,000 units, 11,500 equivalent units. What is that actually saying? What do you think that's saying, the 11,500 units?
That's how many units they completed for that period.
Let's see. This is what this is saying, and let me think the pencil example is it's not. All this is saying is, yes, if they get up to this 11,500, they're going to be able to estimate how long it will take to complete the remaining units for production. for that run. So it's almost, you don't want to say break even, but you want to say that's the minimum that they can do. Okay. But yes, how many they did for the period. Because all that's really saying is you set out to do how many units? You started 15,000, but you only completed 10,000. You really wanted to complete all 15. However, for the period, for the period, while we started 10, we still had 5,000 remaining. There's still 70% out there that still needs to be completed, but how much more can we get within that one period? So it's only maybe 1,500 more. Cost per equivalent unit. So you got product cost for the period divided by EUP, or equivalent unit for the period. They incurred 27,600 in production costs during the period. What is the cost per equivalent unit for the period? So we took 27,600, divided it by that, the EUP, or equivalent units of production, of 11,500, which means that for each unit, it is $2.40 per equivalent unit. So what they're saying here is equivalent units may be different for material, labor, and overhead, given that costs may be added during different stages of the process, which we know that. That's what process order is all about. Simply because costs are allocated by department, not necessarily allocated by job. 40% of material, that means 40% was used. 25% goes towards labor and overhead. They're saying at completion of stage 1 of the process, material is 40% complete. Labor and overhead are only 25% complete. It doesn't really make too much sense right now until you actually do a problem. However, stage 1, 40% material, 25%. When they got to stage 2, at this point, they were at 60%, still at 25% of labor and overhead. So at stage 2, for labor and overhead, for total, at that point, they were at about 50%. And then for between stage 1 and 2, for material, they were at 100% automatically. What does that say to you? What do you think? Is there anybody out there? You don't know? Right. Because it's at its full capacity. Now look at this now, stage 3. This is the process where it's complete. That remaining 50% of labor and overhead has been added. And we know material was at its highest by stage 2. So you're talking about Gen X. I don't necessarily like to use that example, but we'll go through it. So Gen X uses the weighted average cost flow system with the following 4 steps. They determine their physical flow, then compute their EUP, then compute the cost per equivalent unit, and then assign those costs. And this is in your book as well. They started off with 30,000 units of product, right? Direct materials were at 100% already completed. Direct labor was only at 65%, with how much remaining? 35%. Okay, just keep that in your mind. Units started in April were 90,000 units. The units that were transferred to another department were 100,000. So ending inventory, the amount of units that were in ending inventory were 20,000 units. Direct material was at its full capacity being used for that period, and direct labor was only at 25%. Now we're into April, right? They're giving you the actual cost breakdown. So direct materials, direct labor, and factory overhead, but then current period, which is April, direct material, direct labor, and factory overhead. You remember the percentages? Okay, so That's for the previous month and April added together, the amount of cost that we need to account for, which means the amount of cost that we need to get back to, which is at $27,060. Now, how did that all flow for April? The amount of units were 120,000, right? That's what we had to account for. When we got down here and actually tallied up what had been transferred to another department, how much was in ending inventory, we still came out to that 120,000 units. That's how you reconcile. You have to have the same amounts for what to account for and what was actually accounted for. So, direct material EUP, they started off and completed and transferred out 100,000. You remember that from the previous, right? Which means that it was at 100%. Equivalent units is clearly 100,000. It can't be less than that. Ending goods in process, 20,000 at 100% completion, which means that the equivalent units can't be less than that 20,000. So they have to be at least the 20,000. Overhead equivalent units, this is just saying the same thing over and over again, showing you what it looks like when everything is at 100% completion. Cost per equivalent unit for April. So in beginning process, remember they had process inventory. They had 3,300 for direct materials, 600 for labor, and factory overhead 720. They incurred costs for April, 9,900 for materials, 5,700 for labor, and 6,840 for factory overhead. Now they found out that their equivalent units, you remember from the previous slides, 120,000, 105,000. Why do you think it's the same for direct labor and factory overhead? Because isn't factory overhead equivalent to direct labor? When you don't have overhead, don't you use predetermined overhead rate? So this is why their equivalent units are the same for both direct labor and factory overhead. Cost per equivalent unit, they're just doing that equation that you saw earlier. 13,200 divided by 120,000 units to give us 11 cents for direct materials, 6 cents for direct labor, and 72 cents for factory overhead. In the cost reconciliation, we will account for all costs incurred by assigning costs to the costs that were completed and transferred, and then what was finished and sitting in ending inventory. And this is just that same company all over again. So this is important because it just, again, summarizes how different process costing is from job order costing. Shows the flow of units and costs through work in process, so that means through every process you're showing allocation, and then helps factory managers evaluate department manager performance. If it's being broken down by processes and by departments, that's the only way that they can be evaluated based on what is actually produced. And then provides cost information for financial statements, which everything you do in accounting does, and help managers control their departments because it is broken down by processes per department. Now this is where they go into, it's just that Gen X all over again. At this point, look on page 831. They're talking about trends in process operations. First thing is process design. The whole purpose of process design is to make sure that everything flows what? The right way, effectively, efficiently, right? And then we have just-in-time production. What does that mean? That means that companies adopt certain methods that are going to make the process of getting units from each process quicker and on time. And then automation. There should not really be a manufacturing company in place that does not have some level of an automated process. Meaning when you go in their factory, they shouldn't be doing everything by hand at this point, right? They should have some computers. As technology has advanced, they should have computers. They should have those things in place so that the process itself and the production run will go smoother. Services. They're referring to companies that, yes, are manufacturing companies, but service is still a part of their business. Just because you produce product doesn't mean that you're just considered a manufacturer. You still got to do the rest of the process, right? You got to have service when it comes to selling that product that has been completed and finished. You also have to provide service when it comes to delivery to your customers for what you have produced. So service is also intertwined in that. And then customer orientation. Obviously that's important, right? You want to make sure you're doing whatever you can to satisfy your customer. And if that means that your quality has to change and that you have to change some things that you do based on what your customer may recommend or may comment on, then you will have to do that. Okay? Now,
We're on BlueSky. So if you want to join the group,
let's see. Well, we just finished 5. And 6 is really not that much. But that's fine. We can go through 6 together. But quick study 20-2 states Blanche's boxes make cardboard shipping cartons in a single operation. This period, Blanche purchased 62,000 in raw materials. Its production department requisitioned 50,000 of those materials for use in producing cartons. Prepare journal entries to record 1, purchase of raw materials, and 2, requisition of direct materials. So the first one with recording purchasing the raw materials, what do we debit and what do we credit?
debit goes to raw material inventory,
Okay.
and credit goes to accounts payable.
For how much?
62,000.
Okay, and number 2. Now wait a minute. Why did you choose accounts payable?
So that's what in the book.
Let's see. It didn't say on account. So we gotta assume they paid with cash. Unless they had said on account, then we would use accounts payable because they did not. We have to assume that they paid cash for that. And so the second part wants us to record for the requisition, or basically what has been used in production. So what do we debit and what do we credit?
Debit is goods in process,
Goods in process inventory. Uh-huh.
and we're going to credit raw material.
Credit raw materials inventory. What's the amount? Okay, good. Quick study 20-3. Refer to the information in quick study 20-2. Blanche's boxes incurred 135,000 in factory payroll costs, of which 125,000 was direct labor. Prepare journal entries: 1, to record total factory payroll incurred, and 2, direct labor used in production. So first, to record that factory payroll, what do we debit and what do we credit? Factory payroll debit, cash credit. What amount?
135,000.
135,000. Okay. And then the second journal entry is supposed to record that direct labor used in production. So what do we debit and what do we credit?
Debit to
Goods in process. Okay.
And factory payroll credit. Credit to factory.
Factory payroll. How much?
125,000.
125,000. Good. All right. So quick study 20-4. Oh, 5. Did I say 5 and 6?
Yes. 4, 5, and 6.
4, 5, and 6,
And 9.
and 9. Quick study 20-4. Refer to the information in quick study 20-2 and 20-3. Blanche's boxes requisition 9,000 of indirect materials from its raw materials and used 10,000 of indirect labor in its production of boxes. Also, it incurred 156,000 of other factory overhead costs. It applies factory overhead at the rate of 140% of direct labor costs. Prepare journal entries to record 1, indirect materials requisition, 2, indirect labor used in production, 3, other factory overhead costs incurred, and 4, application of overhead to production. So 4 different journal entries. The first one is to record those indirect materials that have been used. So to record the indirect materials used, what do we debit and what do we credit?
Debit factory overhead.
Mm-hmm.
We're going to credit raw material inventory.
Factory overhead and raw materials inventory. How much?
9,000.
9,000. Good. The second thing they want us to find is indirect labor used in production. So what do we debit and what do we credit there?
Factory overhead debit and factory payroll credit.
Factory overhead and factory payroll. How much?
10,000.
Okay. Third thing that we have to find is the recording of other overhead costs or overhead costs incurred. So what do we debit? What do we credit?
Factory overhead
Mm-hmm.
and cash.
Cash. Other factory overhead costs incurred. And they didn't tell us what the costs were. I'm thinking instead of cash, if it just says other accounts, that's what we're gonna use. What's the amount?
156,000.
156,000. And then lastly, it says to find application of overhead to production. So in order for us to find the overhead that was applied, we have to do what? Because they told us to use direct labor, right?
Mm-hmm.
So we're gonna take direct labor and we're gonna do what with it?
Multiply
And that direct labor came from the previous problem, right?
Uh-huh.
So direct labor was how much?
125.
125,000. Multiply that by
140.
140%. That's the predetermined.
Uh-huh.
So tell me, what do I debit and what do I credit?
Yes, and process inventory
Okay.
and factory overhead credit.
Okay. Factory overhead. And what amount did you get here?
175.
1,000?
Yes.
Okay. 20-5. Refer to information in Quick Study 20-2, Quick Study 20-3, and 20-4. Blanche's boxes completed 20,000 boxes, costing $275,000, and transferred them to finished goods. Prepares journal entry to record the transfer of the boxes from production to finished goods inventory. There's just one journal entry. What do we debit and what do we credit?
Finished goods and processing. Well, goods and process.
Goods and process inventory. Uh-huh. What do you credit?
I thought we were gonna credit that, we were gonna debit finished. Did I?
Finished goods inventory, debit, and goods.
So debit finished goods inventory, credit goods in process, because you're taking it out of one, putting it in the other. So debit finished goods in process, credit goods in process. How much? 275,000. And that's all they require for that one, right? Okay, Quick Study 20-6, which is the one you guys didn't get to, but we'll go through it. The following refers to units processed in Sunflower's printing binding department in March. Compute the total equivalent units of production with respect to labor for March using the weighted average inventory method. So if we're using EUP, what is the equation for EUP? You want to find equivalent units of production under weighted average. What do you have to do? Because it looks like, okay, they gave us this little chart. They told us how much of it.
Total cost, divided by the equivalent units of production.
Right, we need to find EDP. So in order for us to find equivalent units, how many were completed and transferred out? Let's start there. How many did it say were completed and transferred out?
100.
100?
I mean, 300 for 340,000.
So 340,000? And to what percent?
100.
100%. Okay. So that means that our EUP is how much now? Wouldn't it just be 340,000? Because that was the capacity, right? It was completed all the way up to what they required. And then they still had goods in ending goods in process, because that's really all we care about. We don't care about what's in beginning goods in process. We also don't care about the goods that are started, because we're trying to find equivalent units. So any goods in process was about 120,000, and how much of that, as in respect to labor, was completed? And what percentage?
120,000 is 25%.
25% was the percentage completed, right?
Yes.
So 120,000. So 120,000 times that 25% gives us how much equivalent units? 30,000 units. So that means that total EUP is going to be 340 plus 30,000, 370,000 units. Okay. Lastly, quick study 20-9. Refer to quick study 20-6 and compute the total equivalent units of production with respect to labor for March using the FIFO. So before we did weighted average. Now we have to use FIFO. How much does that really truly change from the weighted average? What do we have to incorporate now? What do you think? I think at this point we have to include all those other things that we didn't have that we had before. Let's study 20 dash. So if we're using FIFO, how many units did you complete? Well, what were the equivalent units from the last of the what was it, finished goods? What was it? Ending goods in process. What were the equivalent units of that? 30,000. So if that was the ending goods in process, let me just say EU goods in process, that's the beginning. What? That's I'm confusing myself now. Okay, beginning goods in process were 150,000. Now, how much were complete? Huh? No, beginning goods in process for 20-6, 150. And then what percentage was it complete before? 80%, which means we had how many left? 20%. You remember first in, first out from 1100, accounting 1100. Many moons. But anyway, equivalent units. And we might as well say beginning work in process. You had that 150,000, and you still had 20% remaining. But because this was beginning, and we do first in, first out, that's what we calculate first. So 150,000 times the 20% remaining is going to give us how many units? 30,000 units. And then we got to go with whatever is next after that one, if we're talking about first in, first out. So what's next on that grid? Started. So EU for started. How many did you have? 310,000. Units started was 310, and then units completed were how many? 340. Because that's what we want to look at, what was started, because what was started was also completed. So let's just take the completed number of 340,000, and we want to subtract what? What are we subtracting? We completed 340,000 units, right? And we started with 150,000. So I think it's safe to subtract those from what was completed to know what you started with. And that's going to give us what? Because that shows us how many you actually started and actually completed. What's this balance? 190. Now I'll explain it so that it makes sense or is clarified. We know that we completed 340 units, 340,000 units, right? Though in those 340,000 units, most of those are the same ones that we started with the 150,000 units. So the reason why we subtract what we started with from what we actually completed is to see how many were what? How many of those 150,000 units, how many of those 340,000 units were actually completed from the beginning? And I know it doesn't make a lick of sense, but that's just what it is.
Like, I'm stuck on this part on the order.
Really? Okay. Way to describe it, because it looks kind of backwards. 340 is what you completed. You always subtract what you started with to know how many actually were completed. Now this 150, I know you're saying like 190 is higher than 150. How could we have started with 150 and completed 190, right? Right. The beginning, what we started with plus our equivalent units from before is no, I'm saying it wrong. This is what we started with. This is only including what we started in that particular production. There could have been units existing prior to us beginning more. So even though we started with 150, that's how many we started to produce on this run. We probably had some prior to this. We added whatever was prior to plus this. We only completed out of that number 190. So we took what we completed and subtracted out what we started with. And it may just be this problem that's making it hard for me to really break it down to you. And it's really throwing it off because we're not using weighted average method, which is the easiest one to do. The FIFO method with doing the whole first in, first out. One drawback that you have of first in, first out is you have no idea what existed before you actually start. So you have to go with whatever you see there, but it could be very well more than that. But in this case, EUP or equivalent units for that amount that we started and actually completed was 190. Now with the ending in process, we ended up saying that was 30,000 from before, right? Equivalent units process at the end, that was 30,000 from the previous part. Add all these together.
we're adding all of these, so it's like 250.
This is the reason why you're having a problem with it. Go to page 835 of your book, appendix 20-or 20A. They're going through the same process that we would with a weighted average. We know weighted average would generally be easier. However, notice on 836, we start talking about beginning goods and process. It says under FIFO, we assume that production first completes any units started in the prior period. You remember how I was saying there may be units that have been out there that we have no knowledge of, we don't know the number. That's what that's referring to. Units started and completed this period after completing any beginning goods in process. Now notice they didn't say all, but it said after completing any beginning goods in process. FIFO assumes that production begins on newly started units. So you know how I said they may have existed prior to us calculating it, and then we started a whole new production. And so we had no knowledge of what happened before, but we know it exists. And then any goods in process, and it's talking about units started that they were not able to complete by period end. But that's what that refers to. Now, do you know what problem on the homework asked about FIFO? What number? Okay, I need you to email me that so I can remove that because FIFO won't be on the test. So I would hate for you to do it in the homework and then it's gonna be on the test and it's not. So I need you to email me and tell me what problem that is, like if it's number 1, 5, 10, whatever. Tell me that so that I can go and remove it